Whoa! Ark Invest just dropped their new Tesla price target for 2025, and it's delicious. A base case of $3,000 per share and a bull case of $4,000 per share. Hello, it's Roland Mills, a classically trained opera singer and former starving artist. Welcome to my channel. I'm here to inspire you to make money and build real wealth, so subscribe for more personal finance conversations like this one. Alright, let's jump right into Ark Invest analysis. I'm going to keep this one quick and dirty because I'm going to get back to freaking out and finding out things that I can sell so I can buy more Tesla stock. Think people would buy this? I don't need this pillow, right? Quick disclaimer, I am not a licensed financial advisor. I am just an opera singer on YouTube sharing what information has worked for me in the hopes that it will inspire you to grow your wealth as well. Before we get started, of course, I'd greatly appreciate it if you would just go ahead and just boop, tap that like button. It really helps to spread the word to other people like you. Also, subscribe and hit that notification bell thing that's probably right in front of my face so you don't miss out on future tips that I'll be dropping along the way. Let's get into it. We got it pulled up right here. Okay. Ark's price target for Tesla in 2025. Last year, Ark estimated that in 2024, Tesla's share price would hit $7,000 per share, or $1,400 adjusted for its 5-for-1 stock split. Based on our updated research, we now estimate that it could approach $3,000 in 2025. To arrive at this forecast, Ark used a Monte Carlo model with 34 inputs, the high and low forecast incorporating 40,000 possible simulations. Our bear and bull case price targets are the top and bottom quartile outcomes from the simulations as shown below. And let's look below. So we got 3 different categories: Ark's predicted scenarios, 2025 price target, and significance. Expected value, $3,000 a share. Yeah! This is the base case. Prediction for a base case for the Tesla stock price in 2025 based on their Monte Carlo analysis. Then they've got a 25% of this bear case scenario where they're targeting $1,500 a share. Not bad, right? Still double the share price. And then we have the bull case scenario, which is the one I'm hoping for, which is at $4,000 per share. Beautiful. Okay, with no single bear and bull case from our 40,000 simulations, we have selected what we believe to be a plausible case for each one as shown below. Estimated values in bull and bear example cases: 2020, bear case 2025, and bull case in 2025. Cars sold for 2020, as we know, was just slightly under 500,000, right? Bear case scenario for 2025, 5 million cars. 5 million cars sold. Bull case scenario, double that at 10 million. That's wild. Okay, average selling price for 2020 was around $50,000 a car. Bear case scenario, they're expecting that to go down to $45,000. And then bull case scenario is even cheaper, $36,000. Maybe that's banking on the $25,000 Tesla that should be announced this year. Maybe a release onto the market next year. We'll see. Okay, electric vehicle revenue in the billions. So we've got 26 billion in revenue for 2020. Okay, that we know. Bear case scenario, 234 billion. That is a wild increase in just 5 short years. 26 billion to 234 for the bear case scenario. Bull case scenario is $367 billion. That's crazy. That's crazy. Okay, let's drop down to insurance revenue. Not disclosed for 2020, but they think 23 billion for the bear case. This is weird. So it actually drops down in the bull case. It drops down in the bull case. So I wonder, why is it dropping down in the bull case? So what could be is that they're counting on autonomous robotaxi networks. And they're hoping that enough people just use robotaxis instead of owning their own car that they stop insuring their own cars. Human-driven ride-hail revenue. Nothing. Of course, we haven't released that yet. Human-driven, though. Okay, so they're saying in 2025, bear case scenario, $42 billion in revenue from a human-driven ride-hail network. And then the bull case, it's zero. So so bull case scenario, they ditch the whole human ride-hailing service, and they just go straight autonomous. So that's the difference between the revenue differences between the bear and the bull case. Again, it's just autonomous. That's the main differentiator. Autonomous ride-hail revenue. Look at that. 0, 0, and $327 billion in revenue. Okay, so let's look at this. So $327 billion in revenue from autonomous ride-hailing, and the overall electric vehicle revenue for the bull case is 367. That's what's that? $40 billion difference? Huh. 40 billion is nearly twice, or is almost twice what the electric vehicle revenue was in 2020. So it's like they're saying that they're going to double the amount of cars sold to people, but the rest of it will come from. Okay, so essentially they're saying 40 billion of the $367 billion will be from selling the cars to people, and the rest will be from robotaxi network. So the 40 billion is nearly twice the revenue from last year. So that if we double the amount of cars sold, that's only 1 million cars sold. So they're saying in 2025, of the 10 billion cars sold in the bull case scenario, of the 10 million cars sold in the bull case scenario, only 1 million of those cars will be to us, to people. The rest will be for the fleet. 9 million for the fleet and 1 million for the people. Wow. Let me see. Electric vehicle gross margin, 21% in 2020, 40% in the bear case, and 25% in the bull case. Okay, so what could be the reason why that drops down? Maybe the ramp up period in margin growth for autonomous. So it'll be like a subscription service model, right? So you're paying more over time. But you're not paying that upfront fee. So they're not getting the initial revenue from the sale of the car anymore. They have to build the car at their own cost, and then as the revenue from the robotaxi service comes in, it pays for itself. So the first year, maybe year and a half of the car's operation is just paying back its initial debt, and then it's profit after that. So I'm sure if you went beyond 2025, that margin would jump up from 25 to 40 to 50 to 90% margin, which is delicious. Okay, where was I? Total gross margin, we talked about total EBITDA margin 14%, 31%, and 30%. Enterprise value 162, 14, and 18. Market cap in billions of dollars. Hey, look, we got a little typo here. They forgot the dollar sign here next to 673 billion. But 673 billion in market cap for 2020, 1,500 for the bear case in 2025. Sorry, 1,500. No, that doesn't make sense. 673 billion for 2020, a 1.5 trillion dollar market cap. Sorry, for the bear case, and then $4 trillion for the bull case. That is a very big difference. $4 trillion company up from 673 billion. That's wild. Share price, like we said, 700 right round now. 1,500 for the bull case, so doubled your money. That's great. And then 4,000. What's that, like 5.7 something times your money? That's great. That's almost a 6x stock right there. Okay, next section. Key assumptions for the bull and bear case examples reflected above. So example for the bear case and example for the bull case. Using Wright's law, electric vehicle gross margins never exceed 40%. In the bull case, it never exceeds 25%. Capital efficiency, gross capex per car 8,000, and in the bull case 6,000. Maximum annual production increase 65% in the bear case and 90% in the bull case. Wow. Let's read the little description beneath that. The simulation drives production as a function of available cash flow and for investment in EV manufacturing plants, but exposes a fixed scaling constraint on Tesla's ability to grow, reflective of likely raw material and battery production bottlenecks that the company might encounter. That's a real thing. The battery problem is a real problem, and until we solve that, we can't really be 100% sure that Tesla will be able to scale, or any of the EV companies will be able to scale as quickly as they want to, and as much as demand would allow them to. Percent of all Teslas on autonomous platform in 2025, 0% in the bear case, but in the bull case, 60%. So 60% of the fleet would be using the ride-hailing platform, would be sent to the fleet so that they can make money for their owners and make money for Tesla. That's awesome. Percent of cars sold to human-driven ride-hail, 40% in the bear case and 40% in the bull case. Okay, next section. Key updates to our model. We published our forecast price target forward 1 year to 2025. We refined our estimates for Tesla's capital efficiency. We added Tesla's insurance business to our model. We added assumptions for a human-driven ride-hail service. We increased the probability of Tesla achieving fully autonomous driving within 5 years. Ooh, I would love to live in that world, right? Electric vehicles. Since our 2024 analysis, we have increased our assumptions for Tesla's capital efficiency. Previously, we estimated that Tesla would spend $11,000 to $16,000 per incremental unit of capacity in 2024. In 2019, Tesla spent $1.33 billion on capital expenditures, or CapEx, and produced 509,737 vehicles, an increase of 144,505 vehicles from the previous year, suggesting that its CapEx per incremental vehicle produced was roughly $9,200 in 2020. Tesla spent $3.16 billion on CapEx, putting capital efficiency in 2021 at $10,330, assuming a 60% increase in vehicle production. Note that this math probably overstates the capital required for an incremental vehicle, because a portion of CapEx is for long-dated projects like autonomous data centers and Tesla's vertically integrated cell factory. At Battery Day, Tesla announced that its updated cell chemistry and manufacturing process would reduce investment costs by 75% over time. To give Tesla credit for what we believe is its superior capital efficiency, we lowered gross capital expenditure per car in our latest model. Given these updated estimates, along with an additional year of growth added to our model, our forecast for Tesla's unit sales is between 5 and 10 million vehicles in 2025. So exciting. Okay, let's talk about insurance. Ark estimates that Tesla could achieve better than average margins on insurance thanks to the highly detailed driving data it collects from customer vehicles. Partnering with underwriters, Tesla introduced its insurance product in August 2019. Currently, it is available only in California. Ark believes that in the next few years, Tesla could roll out its insurance offering to more states, underwriting its own insurance policies because its vehicles have better than average safety profiles. Tesla should be able to use real-time data to offer insurance to its vehicles, pricing it dynamically, lowering customer acquisition costs and increasing margins relative to Progressive's 13% EBIT margin in 2019. Ark estimates that Tesla could achieve margins close to 40% if it were to sell 40% of vehicles with its own insurance offering by 2025. Tesla's insurance revenues could approach $23 billion annually in our bear case. In our bull case, Ark estimates that as robotaxis ramp, Tesla's insurance revenues will be incorporated into a platform fee. Insurance boosts our price target by roughly $60 in 2025. Human-driven ride-hail. Ark's bear case now includes Tesla's opportunity to launch a human-driven ride-hail service. Previously, Ark detailed that a Tesla human-driven ride-hail service would have a lower cost structure than that of incumbent companies, laying the foundation for a fully autonomous ride-hail network. In our bear case example, ride-hail could add an additional $20 billion to Tesla's operating profit by 2025, increasing our price target by about $500. In preparation for its robotaxi service, Tesla could launch a human-driven ride-hail network first, delivering a highly profitable recurring revenue stream and limiting the downside of a failed autonomous service. Oh, don't say that. It won't fail. A human-driven ride-hail service could boost Tesla's price target in Ark's bear case significantly. Fully autonomous ride-hail. In our last valuation model, Ark assumed that Tesla had a 30% chance of delivering fully autonomous driving in 5 years, ending 2024. Now, Ark estimates that the probability is 50% by 2025. Since our last forecast, neural networks have solved many complex problems previously considered unsolvable, increasing the probability that robotaxis are viable. Ark estimates that Tesla's vehicle fleet gives it access to 30 to 40 million miles of data per day, up from 20 million per day last year. If successful, Tesla could scale its robotaxi service rapidly, allocating the additional cash in turn to manufacturing capacity, serving its autonomous network. If 60% of its vehicles equipped with autopilot were to serve as robotaxis, Tesla could generate an additional $160 billion in EBITDA in 2025. In our bull case, ride-hail would account for the majority of Tesla's enterprise value in 2025. Note that autonomous driving pushes the distribution of our expected price targets up significantly, as shown below. The first chart represents the likely distribution of all possible price targets from our Monte Carlo analysis, while the second chart, which shows which scenarios occur within the ranges of price targets across our distribution. Let's take a look at that. Okay, Ark's estimate for Tesla's 2025 share price. Look at this graph. Look at this graph. Look at this graph. Look at how, that's what we just went through. That little scoop up there. Okay? That's where we're at, around $700 a share. Bear case scenario by 2025, $1,500. Expected value is $3,000. Bull case scenario, $4,000. But look at the scale of this graph. We've got $3,000, $8,000, $13,000, $18,000, $23,000, and $28,000. And this graph implies that once all these things come together, 2025 could be the tipping point for an even faster rate of growth. So we're talking like literally Tesla to the moon. What would that look like at $28,000 a share? What would that, oh my goodness, what would that look like? Let's open up a new tab here. Let's just pull up a rate of increase calculator. Come on, internet, load. Okay, percentage increase calculator, load. Okay, starting value, let's say $700 a share. Not 7,700. Final value is 28,000. Calculate. Whoa, 3,900% increase. That means 40xing. That means it could 40x. That means that you multiply whatever money you invested at $700 a share, and then multiply that number by 40. What if 28,000 is the share price in 2030? Oh, everybody, you guys need to buy Tesla stock. It's time to buy even more Tesla stock. Anyway, let's get back to this. Okay, let's just skip down to the conclusion here. Given the updates outlined in this blog, Ark's 2025 price target for Tesla is $3,000. Ark's bear and bull case suggests that Tesla could be worth roughly $1,500 and $4,000 per share, respectively. We published our model on GitHub. Oh, gotta check that out. And invite you to test your own assumptions and or craft visualizations from the simulation outputs for our assumptions. Note, we do not model Tesla's utility. What? We do not model Tesla's utility energy storage or solar business in our models. We also have not modeled Bitcoin assumptions in our model. For Ark's work on Bitcoin as corporate cash, please download our latest Big Ideas presentation. Oh my goodness. Whoa. So if this whole graph, whoa, $4,000 bull case scenario, not counting energy, or whatever gains that Tesla can make from Bitcoin, Tesla to the moon. Oh my goodness, this is gonna be exciting. Well, that's the end of today's video. I hope you found it educational and entertaining. I'll eventually monetize this channel just so YouTube will blast it out to more people, but I really am not doing this for the money. I'm doing this because I truly believe that there must be a way for artists like myself and my friends to create without becoming starving artists. Stay tuned for more personal finance conversations, reaction videos, and stories from my days as a performer in the future. In the meanwhile, feel free to follow me on Instagram and comment down below if there's a topic you'd like to see me tackle next. Till the next time, I hope you all keep creating and spreading love through your art. That's something that money cannot buy, and it's the best part of the human experience. Much love, y'all. Bye.